Hey, it's Elgin over here at Elgin Walker's Real Estate Cafe, and I want to give a quick talk here on some things I'm finding that are honestly that really are hurting my heart a little bit. Is I've been on several presentations here lately, and there's one thing that I want you guys to understand. If you happen to be behind on your mortgage payment, and if you're in some sort of distress, you've lost your job, whatever the situation is, you're just not been able to handle your mortgage payment, and you're trying to do a loan modification. Please understand something. A loan modification is for someone whose home is upside down, has no equity in it, and you're trying to basically renegotiate the terms that you agreed upon for your mortgage for whatever reason. Here's what I'm finding. Because the information that is being told to some people is very disturbing, and I've run into this now 4 times in the last week and a half. I'm going to give you an example. Let's suppose that you owe, I don't know, approximately, let's say you owe $200,000 on your house. And let's suppose you're about, I don't know, $15,000, $20,000 behind in your mortgage payment. The bank has started a foreclosure proceeding on you, and you are at the point of where you have a notice of trustee sale. So let's take a look at this. You owe $200 on it. You're about $20,000, not including fees, in the hole. But let's suppose that your house is worth $300. In one case right now, I have one that's worth $100,000 more than all that. But let's just use $300. So if you were the bank, why would you renegotiate the terms of a loan with someone when at this particular point that person has the ability to sell that home, pay you back what they owe, and have money themselves? If you're the bank, what are they going to do? In most cases, the bank is going to foreclose on you. They are going to foreclose on you because upon foreclosing on you, they can now get their money back, plus the money that you already are behind in payments. And in a lot of cases, they'll get additional money because they'll sell the home at market value. Please understand that you're listening and talking to people that are telling you loan modifications. You may be working with Keep Your Home California, which is a great organization as far as I have seen. They've been able to help quite a few of my clients, but there's certain things that they can't tell you. And I understand that keeping your home is your priority. But here's your worst case scenario. Your worst case scenario is this. You sell your home. You make money. You pay off your debt when you sell your loan. Now all you do is you clean your credit and you buy another home. That's your worst case scenario. Or of course you don't buy a home, but you've got cash from the sale of that previous property. Hopefully you've been able to at least get your down payment back and or whatever, but you now have some cash to work with. Now, I'm not talking about if you're upside down. If you're upside down and you're facing a short sale, that's a whole other different conversation. But I am running into people that right now can sell their home, will have money for it, but are staying in the property, hurting themselves, hurting their families, and unfortunately will probably lose their homes and their money and their equity. Don't be one of those people. If you have questions, if you're going through something, feel free to call the Elgin Walker team. We love to discuss your situation and see what we can do to help you and your family. We start by seeing what we can do to help you stay in your home. And if that is not an option, let's talk about what we do to restructure, rebuild, and get you back into a positive situation. As always, remember, no matter what you're going through in life, it's just a temporary condition because things do change. And no matter what you think, it truly is a great life. And God bless you now.